Hello, everyone, and welcome back. My name is Greg Furman, and this is the VantagePoint AI Market Outlook for the week of June the 1st, 2020. Now, to get started this week, we're going to begin where we always do with that very important US dollar index, but we're going to start the week in this presentation a little different. Now, what you can see is I've drawn a series of vertical lines across the screen which represent the beginning of the month. When we look at and assess this on the dollar index, we can see very clearly that out of the last 5 months, that 4 of those 5 months, or 80% of the time, the dollar has shown strength in the beginning of the first week of the new month until after the non-farm payroll, except for 1 month right here, and that's largely to do with everything that's gone on with the COVID virus, the lockdown, etc. So once that has basically gone away, then we can see that we start to return to normal again. Now, the leading indicator for that, of course, is the medium term crossing the long-term predicted difference at the beginning of the month once we've bottomed out on price. So again, we can see this, and even in the month where it took an extra few days for the dollar to show that strength, the medium term crossing the long-term predicted difference still warned us that something was going to happen. We can see a very clear signal here. Now, what we want to assess from this particular setup in this pattern recognition is we're seeing the exact same signal forming yet again. What we're waiting for is for the neural index to match the medium term crossing the long-term predicted difference. The predicted RSI is already starting to flatten out here, the slope of it. Again, we're at a major verified support low. That's coming in at or about 98.34. Very often this is what happens is we have a bear trap setting up here. So in my respectful opinion, based around the analysis done here, there is an 80% chance that the dollar is going to reverse higher next week. Now, if that does, then lately gold has actually been following the dollar. So when we look closer at this right now, gold is recovering. So if the correlation between gold and the US dollar is a positive correlation, then both could go up next week. When we look at our major support levels, we have 1731 and 1737. As long as we're holding above these particular levels, we should go higher. Now again, the predicted difference is rising. We've got our neural index turning green with a rising RSI, all of which is telling me not only is the US dollar likely to go higher, but gold could go higher also if the market turns to a risk-off sentiment. So when we look closer at this, the S&P 500, in my respectful opinion only, is approaching a very, very strong power of what I would call a powerful resistance area in this verified zone between the current price and 31.24. Again, in my respectful opinion only, this is likely where the order flow traders are going to come out looking for shorts, looking for value on those shorts. 31 up anywhere above 36, between 30.60 and 31.24, we are likely to see those buyers or sellers, excuse me, come out. This is being verified by the medium term crossing the long term predicted difference. Now it's starting that means the medium term trend is starting to weaken against the longer term trend, which has clearly been up. So as the RSI starts to roll over, it's a warning sign to be very, if nothing else, to be very cautious about buying the S&P 500 at these current levels. The same thing would apply to light sweet crude oil. We can see that oil is up against these very strong verified resistance zone. Our medium term crossing our long-term predicted difference is a little mixed right now, but again, if stocks start moving lower, then oil predominantly follows. So we'll continue to monitor these levels, but right now it looks like both are getting ready for potentially a move lower. Now, how would this affect, again, Bitcoin? When we look at Bitcoin, Bitcoin continues to show resilience here while above this most recent support low at 82.01. We have additional verified support coming in at 86.47 and further very strong support at 88.19, but very powerful resistance up here around this 10,000 mark. Our medium term crossing our long term predicted difference with a rising RSI suggests that Bitcoin does have more upside potential. So buying on dips remains the better strategy, again, in my respectful opinion. As we move into our major currency pairs going into next week, based around the analysis, looking at those patterns in the US dollar, where four out of the five last periods in the last 5 months, excuse me, 4 of those months, the dollar has strengthened in the first week of the new month. So when we look at this right now, the euro is up against a very strong verified resistance zone. That particular level is coming in at or about 1146. But again, the question is, can we break through that? It would appear, looking at the analysis and the signal in the dollar index, that that's unlikely. Now remember, there's 100% inverse correlation between the dollar index and the euro. So if you're a euro trader, or euro US trader more specifically, then you want to be watching that dollar index very, very closely, because even if it moves lower, the euro or the dollar index moves higher, forcing the euro lower, that can produce some very good returns. I would anticipate that the euro will start to sell off by midday Tuesday. Monday is always a reversal day, so we look for one final push in the euro US pair, only then to see it reverse Tuesday, Wednesday, Thursday, Friday until next week. So again, watch these levels. When our neural index turns from green to red, that will be the trigger for us to get short. Now, if we're looking for places of value to buy dollars, even if it's just for a week, then obviously the US Swiss franc comes to mind too. We have, again, very strong verified support at 95.89. I anticipate they will try and run this support level by maybe 20-30 pips, only to see it violently reverse again on Tuesday and Wednesday. So watch this particular level. But right now, our medium term crossing our long-term predicted difference to the upside once again looks favorable for long. So we'll be watching this level very, very closely and looking for the neural index to turn from red to green, because again, this is not a recap of something that's already happened, guys. This is a weekly outlook. It's forecasting forward, not backwards. So we're looking for what's going to happen in the market. So we look at these different patterns. We also look at the indicators in VantagePoint for a signal. We can see that the RSI using a 60-40 split is not breaking down below the 60 level. Another strong warning sign that the downside could be very, very limited here. Now, as we go into the pound dollar trying to form a buy signal, but as we can assess here that the market is moving higher, but our medium term crossing our long-term predicted difference looks set to cross to the downside. So once again, I would anticipate one more day of strength out of the pound dollar, only to see it reverse on Tuesday. Be very cautious about getting caught in a bull trap between these two major resistance levels. We've got one at 123.62, and we have an additional one which is very significant up at the high at 124.66. Selling into the 124.66 with a confirmation of the medium term crossing the long term predicted difference to the downside, combined with the neural index, is the signal we're looking for to short this. Now, as we look at as we look at the dollar yen going into next week, we continue to move sideways in this chop. But oftentimes in the week of the non-farm payroll number, the yen is weaker. So we're looking for dollar strength even against potentially the yen. But if we get into a very strong risk-off environment, the yen will strengthen, even if the dollar does. So it'll be quite the battle between these two next week, but longs are very dangerous at this particular level unless we can break free and clear of 108, 108.20 and stay above this level. Once again, the indicators are not suggesting we are going higher, so we would look here again to sell into rallies at least for another week or so. Now, as we move towards the Canadian dollar, again, we've got a very heavy economic docket next week, including the Bank of Canada, which I don't think is going to be very favorable for the Canadian dollar. The Canadian economy has been ravaged by not the COVID virus, but more the politicians controlling the economy. So again, Canada is slowly starting to open, but as you can see, we've got a heavy baseline support down at 137.25. Our medium term crossing our long-term predicted difference with the neural index is one of the most powerful buy signals you will see in the VantagePoint software. Longs are heavily favored. However, remember what I've always stated with the US Canadian pair, that often it fakes the market out on Monday. So expect a move lower on Monday, only to see a dramatic reversal to the upside on Tuesday. The Bank of Canada on Wednesday is a wild card, but I don't think we're going to see anything new here. I think they're going to say the rates are going to be on hold. They're going to be on hold for a very long time. Equities move lower, oil moves lower. None of this is a positive for the Canadian dollar. So when we look at this closer, clearly buying this around the 137, 130, between 137 and 137.50 is a very, very reasonable play. Now, as we have, if we anticipate that the dollar is going to strengthen, we can also assess here that for the last 4 trading sessions, Australia-US has been banging up against this very powerful Vantage Point verified resistance zone at 66.84. We're looking for this level to either break or hold. The bias here for next week is that we get a single push on Monday, only to reverse on Tuesday. If we're looking for places of value to buy US dollars, Aussie US and New Zealand US could be a very good trade. We can also assess the correlation between the Aussie, the New Zealand, and the CAD, that all three of these run together. So if one sells off, the other two are likely to also. So this resistance here is very formable. We've got our medium term crossing our long term predicted difference. All of this points to a move lower unless we can make a sustained break of, I'm going to round it out to the 67 level, which I think at this particular time is unlikely. However, if the stock, the S&P 500 moves higher, the Aussie will follow, the New Zealand will follow, and the Canadian dollar will follow. The correlation between these three currencies and the S&P 500 is the strongest I've seen in a very, very long time. So if you're trading Aussie US, New Zealand US, or US CAD, you're watching the S&P 500 very, very closely. And again, we can assess the New Zealand is almost identical. If I take just a strict horizontal line here and draw it, we can see on a price action basis, clear as day, 4 days, we're not there. This is telling me there are no buyers here, guys. Our medium term crossing our long term predicted difference. We are simply waiting for the neural index to get on board here. When it goes from green to red, that will be the trigger for us to get short. So with that said, this is the VantagePoint AI Market Outlook for the week of June the 1st, 2020.